Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, September 13th. Michael Boutros here with you guys. Good morning to everyone in the room. Horace, Conwal, Medad, Rich, Scott, Steve, Trevor. Good to see everyone here in the room. So, we finally got all the commentary out of the way yesterday with all this nonsense from the FOMC. Obviously, Brainerd coming out much more dovish, less hawkish than the markets were looking for. We've pretty much priced out any possibility of a September rate hike. In fact, today, guys, if you check out the front page of the Wall Street Journal, you can see a headline article there from Hills and Rath, which is obviously the unofficial mouthpiece of the FOMC, essentially coming out and say that, you know, September is off the table, and you know, the FOMC will be more likely to stand pat on policy. So you saw the dollar take a little bit of a spill yesterday. We're capping or recovering those gains here today, but the broader levels remain unchanged for the dollar index. So we'll take a look at that. Obviously, yesterday's setups on the euro, pound, and CAD we'll also take a look at. I still favor the long side on all of those. Dollar CAD coming in some resistance actually might be a near-term nice short. Aussie dollar, we'll talk about that. Still favor the long side there from a little bit lower. Kiwi could make another push higher before it turns. Euro Aussie setting up a nice weekly opening range, and if there's time, we'll touch on dollar yen and pound yen. Any other questions you guys want to look at, feel free to let me know. Conwal says, hello, good morning. Sir, your technical levels for crude are working very well. Cheers, Conwal. Yeah, we'll definitely, let me write that down. Definitely take a look at crude and gold. I want to keep tracking those every day. So, we'll definitely take a look at those. Eileen, great to see you. Sterling dollar, will it or won't it? We'll take a look there. Graham, Horace, good morning to you. Adam, ditto, my friend. And Conwal again says gold as well. I got you, man. Okay, let's jump right in. Here's the relative performance of the greenback heading into the U.S. session. You do see that the pound was the weakest performer. Now, we did get some weak CPI data earlier today from the UK. Not necessarily weak, but weaker than expected. So we did see a build on year and quarter-on-quarter CPI, but we did miss forecast estimates. See the pound down 0.69% today. The loonie, second biggest loser here as we continue to see crude trail lower, 0.59% to the downside, same as the Aussie dollar, and Kiwi with a loss of 0.5 percentage point. Euro holding its ground. Up 0.06, so pretty much a negligible hold here, despite the bounce that you see in the dollar. So still favor that. Even on the pound drop down here, I think it's coming to an interesting level. We might offer some support, and we will take a look at those. With regards to the UK data that we got this morning, here's what CPI looked like. Again, just missing consensus estimates. So looking for a 0.4% clip, came in at 0.3, but a nice build off the previous month. More importantly, core held at 1.3. We were expecting an uptick to 1.4. Okay, now obviously a weaker pound is going to fuel this inflationary these inflationary figures. So right now doesn't necessarily mean we're going to see a shift in policy from the BOE based on these numbers, but it was enough to make a little bit of an interruption here on the sterling rally. Oh, Eileen says there it goes. Is it going right now? Let's take a quick shift here and just jump right into the pound here. So this is the interesting area of support, Eileen. I'm going to bring up yesterday's chart real quick on the pound. The major thing that we were looking for is right here, and that's the area that we're testing as support right now. Former basic trendline resistance. This is a parallel of the same slope extending off of the post-Brexit high. Okay, if you take that same slope and extend it off of the August highs, you saw a really nice pivot there, a break. Now that support structure comes in line with a basic slope, just basic trendline support off the lows. Now on the near-term chart, I am using a slightly different slope, and I'll show you that in a moment. Either way, it's highlighting this key region of support right now. Here's what the 30-minute chart looked like last night, or the 60-minute rather. It's right here, 132.34. It's the weekly opening range low. Again, that former slope, and just a basic former trendline resistance. If it is still a valid trendline, should offer some support. That's what we're coming into right now. So an area of interest for me right here, Eileen, is actually for support to hold at this juncture in the pound. If this does break, I'm going to invalidate the near-term long bias, and you'd actually be looking for a drop all the way down here to 31.55. This is the broader key support, basic slope support off the lows, okay, and a 50% retracement of the entire advance off of that low from August. So I actually I'm looking for long triggers right here. Momentum is in oversold territory, so I'm very hesitant to do anything on this. Let's see what the near-term chart looks like on the pound here. Okay, you are marking some divergence into the low. But I don't want to be caught trying to catch a falling sword here. So if it does make the break, Eileen, I wouldn't be doing anything. I'd sort of be sitting on my hands. I would like to still possibly try to take a long position off 31.55. Like I said, you got the monthly open just below that, 31.37, 31.36 here. But this is still going to be a near-term support I'll continue to watch heading into the U.S. Open. Don't have any conviction triggers to work off of here, although this looks interesting. I'm not going to stress it because we kind of probed through, but might be something to watch here heading into the U.S. Open. It's the pound. Keep in mind, it does these things. You're going to do the push through, the throw over, try to fake out some of these moves before you make the final reversal, but we'll continue to track this one throughout this session. It's the pound, she says, all morning, Eileen. Yeah. She's definitely a wicked one for near-term price action, but it's at a decent level. If it's going to hold, and this is just an interruption based on the CPI numbers this morning, I would be looking for kind of a reversal higher off these levels. All right. Any questions on the pound? I guess we kind of just jumped out of order here, but with it on the move right now, I think it's prudent for us to wait for a little bit deeper of a drop here before trying to take the long position. By the way, let me just see. Does this offer any guidance? Okay. Whoops. Kind of brings the focus a little bit closer in time. Okay, so still favored longs over 31.55. If we push through 32.30 here into the open, below the weekly opening range, I'm going to kind of sit back for a little bit and let's see if we can get this drop going down lower. If you're trying to play the short from here, guys, it's just not a good idea. I don't have any conviction highs to trade against as far as the stop. I mean, even if you use the European high right now, it's not really a major level. You do have the weekly open, which could offer some resistance, but not really necessarily looking to play a short on the pound here. All right. So that was number one for today. Let's go back to yesterday's update. Again, no changes on the levels here for the pound. The euro dollar was the first chart that we wanted to highlight. And here's what this looks like. Guys, look, I haven't taken anything on the euro yet. And again, if you put a gun to my head, I think this thing is going to rip. But intraday price action has been very tricky. And all this thing has done, and it's the same with the Euro Aussie, which we'll go over in a moment, but all this thing has done is just set a pretty easily identifiable weekly opening range, which continues to straddle the 1230, 1229 sort of pivot range that we've been following for the last couple of weeks. So broader bullish invalidation, still 111.70. I do like a long, while above this region, playing the long side of the scalp in any event. As far as a breakout type of play, we still need to clear a basic trendline resistance off of the August highs, basic slope support. This is just the origin of the slope off the lows. Really nice pivot. Caught really nice pivot along the highs. I really want to see this region kind of give out to play the upside here in euro. But I am looking for long triggers, broadly speaking, in price. So, price action hasn't been all that inspiring on an intraday basis, guys. I don't blame you for getting a little frustrated here. These are the kind of market lulls that we'll expect to see, and it's only going to get worse as we get towards the end of the week, okay? You have retail sales for the U.S. on Thursday. You have CPI print on Friday, which is going to be the bigger one. Obviously, that's what the Fed is really looking on. And then everyone's going to be looking to the FOMC interest rate decision next week. So the dollar pairs might start to fall out of favor with us. And if that happens, it happens. We'll point your attention towards some crosses that might give us a little bit more juice on an intraday basis. But for the euro, there's really not much to discuss here. I still like the long side, specifically 112.56, guys. If we're able to close above that region, that was the high volume day, might be a nice indication that we're starting to see the onset of a little bit more of a concerted breakout. But until that does, this thing is a range all day long, straddling that 112.30, 112.29 region. So I'm not really a big fan of any intraday positions yet on euro. Although I must say I've been kind of looking for long triggers. I haven't been able to find anything worth my while yet. All right, any questions on the euro dollar? Do keep in mind, as far as euro data is concerned, later this week we also do get CPI numbers right ahead of the CPI numbers from the U.S. on Thursday here, with CPI expected to show a little bit of an uptick here on a month-on-month basis. Keep in mind the core year-on-year is really the main headline print here. This is the final read for August, so unless there's any revisions, don't really expect to see much on this, but certainly something to keep in mind if you're trading euro heading into tomorrow's open. And one other thing, here again, the Fed Fund futures, just wanted to review this with you guys real quick. You did see a slight softening in overnight. If you remember yesterday in the report, Fed Fund futures were showing 57% on the December print. That's now reduced to 54%. You also see a slight downtick here in September and November. The long and short of it is, again, markets starting to price out the interest rate possibility for a hike until December. Okay. And certainly the only material expectation still is December. So you're going to hear headlines over the next couple of days about the September read from the FOMC and the possibilities and all this. You can see here that markets are essentially saying, ain't going to happen. Okay, so any questions on sterling or euro at this point? Just to go backtrack real quick to the dollar index, which we've been tracking obviously just for the base dollar moves here. No change on any of the levels for the dollar index. We're still trading broadly within the same key range that we've been talking about for the last few weeks. Near-term resistance still 11,960. Bearish invalidation still the monthly open. And key support still 11,850. Okay, so downside favored below this region still. At the end of the day, we need to see a close sub 11,850 to really get this thing going for the next leg lower in the index. From a near-term standpoint, here's what it looks like. The region of resistance we're coming into right now is sort of going to be a possible near-term breakout zone if we do make it through. And that region right here is defined by 11,000, like I said, 960 into 955. 955 actually completes an exact 100% extension off the low. While the 618 off the high is going to be right here at 960. So look for some near-term resistance. This is the weekly range high so far. If we do break, look for that rally towards the key resistance level that we talked about and near-term bearish invalidation. All right. So levels still remain pretty darn clear here on the index. Any questions on the greenback? Conwall says, Michael, I closed my crude short around 45.26. Is this okay or open it again? Conwall, let's take a look at crude. So let me take a step back, Conwall. I'll jump into crude in a moment. Let me just do dollar CAD real quick and sort of see what the implications of the crude price action is saying. So dollar CAD, what I was telling you guys earlier as we were opening this session, we kind of just blew through it, was right here, this trendline resistance. This is a basic trendline resistance extending off the highs that we made in July. It caught the advance, earlier in the week here on the open, and last night's update I was citing interest for a long entry from right here. I know that Swing Trades, Jamie's post also had the same exact entry, a nice basic 38.2. I had a median line coming right into that last night, and your bullish invalidation levels right here, 29.73. So you didn't get the move lower. We were 30 pips off the lowest one, 30.29, before this thing turned. And now we broke that trend line and tested the first topside target, 31 31.49 to 31.56. Okay, huge Fibonacci confluence. This is the 1618 extension from the advance off of the lows. This is a basic 786 retracement from the decline off the high that we made in July. You can see that it also converges dead on with the high that we made for the opening range of the month. So we're kind of probing through that right now. You want to keep that topside focus in play, essentially near term now while above the monthly open, which comes in at 31. Next near term target to the upside, 31.86. Okay, so this CAD weakness continues to be a theme that we've been working with. This is sort of a big deal if we close at these levels now. Look at this median line here. That's going to be the next major hurdle. High day close, the median line off the lows, right here. So 31.88, 31.86 is going to be the sort of the breakout region where if we do clear that, you're looking at targets up a 200-day moving average. That's 32.67, and a swing high here from back in March that takes you into 32.96, essentially the 33 handle. So you want to be buying pullbacks above the monthly open. If today reverses and the US Open takes us right back below 31, I would still be looking at these same targets for possible entry, guys, on the long side. Okay, 130.86, basically this slope. I do have to say at this point, this retracement is going to be null and void. So let's just go ahead and clean this up. Weekly range low brings this up to here. And that's a nice pivot right there we'll work with. Keeps the level right about the same. All right, so a slight adjustment there. Feel free to take a snapshot, by the way, of the chart, guys, if you need this for future reference. But these are sort of the major key levels I'm looking for dollar CAD at this point. Wouldn't be interested in looking for long side exposure at these levels. Okay, we'd need to get back into the monthly open at that 31 handle. I mean, if we get a dream drop back into 30.30, but those would be the first initial support levels we'd be looking at. One thing I do want to say, and I was just talking about this with Jamie just a moment ago, guys, is this. It looks like this could be a 1, 2, 3, 4, 5. And the completion of a fifth wave would certainly put us on track for a little bit deeper of a correction before the next move higher. The reason that looks appealing is because, remember, when we're looking at Elliott, within the confines of each wave, also there should be clarity as far as the directional wave count. And even here on wave 3, which is always going to be the longest, strongest part of the rally, you have 1, 2, 3, 4, 5. So it looks like you have 5 waves within the confines of wave 3. Broader structure looks like a 1, 2, 3, 4, 5. So I'm actually starting to think you might get a pullback here, which is why, like I said, I'm not interested in long exposure at all. I'd need to see a drop at least into 31 if you see long triggers. But if the wave count interpretation is correct, you know, you'd be looking for a little bit more of a short play here back towards basic structural support. All right, so from an immediate standpoint heading into the US Open, that's kind of my mindset right now. The broader trade still looks constructive, right? I don't think anyone's going to argue that with me. But with this near-term resistance here and the interpretation of the wave count just off the lows, you know, it could be actually a decent short if the US Open gives us sort of a spike high again and a failure in momentum. Let's see what the near-term chart looks like on dollar CAD. And it's still an overbought condition, so remember, never really a smart move to try to fade an overbought condition. You have a trigger here on a 5-minute chart. We'll keep that in view as we head into the US Open. A break back below 70 in and of itself would be sort of a near-term trigger on a short side for dollar CAD. So keep that in mind. Ideally, guys, I would like to stretch into that median line right here. It caught the high exactly last month at the very end of the month. And it's been a really nice pivot as far as this slope is concerned. This is the same slope, guys, a modified pitchfork from just basic slope off the low. So I would love to see this thing stretches just a little bit higher and gives us a short trigger here. Might be a decent downside play into the U.S. Open. Keep in mind that a quarter of the daily ATR is yielding about 25 pips. That's our sweet spot as far as scalps are concerned. So something to keep in mind. Conwall says, if short, then where to place stop loss? So this is why we wait for the U.S. Open, right, Conwall? I want to see price action develop here a little bit, show us some more range-bound activity. If we do get the trigger, my stop would be just a little bit above the highs for the session. You want to give yourself a little bit of a cushion. You have a 25 pip target, so maybe another 10 pips above the high, another 15 pips above the high here gives us a little bit more of a conviction trade. You're essentially trying to trade it against 31.86 if you can get it high enough. All right, does that make sense? Remember, these are always going to be very tricky. These are counter trend trades. So if we do take this kind of short exposure, guys, again, I'm a little bit more aggressive, been doing this for a while, but you want to reduce your leverage and you want to be a little bit more sparing as far as trying to build into the position because the broader trade still remains constructive. Like I said, the near-term wave count interpretation and the key resistance zone you're at has me looking for an exhaustion pullback, not a reversal, just a correction. Okay, it's a big difference. If we were coming into resistance, Conwall, and this was a downtrend, I'd be telling you guys to be a little bit more aggressive on it, right? Because within the confines of a downtrend, coming into a key resistance is going to be your best shot. But this is, within the confines of a broader uptrend. So we want to fade with caution. So now that we've sort of taken a quick look at what's going on with dollar CAD here, possibly looking for a pullback, that's CAD strength. Conwall says, I understand. Thank you. More than welcome, sir. Always good to see you in the room. Now that we're looking for sort of a little bit more of a near-term pullback in dollar CAD, here's what crude looks like. And that would suggest that we could see a little bit more range-bound action in crude. And I'm not surprised for that region, for that expectation on one basis, Conwall. Remember this slope that we threw together yesterday in the webinar? Basic trendline support off the lows. If you take a parallel off that, you saw a really nice, decent pivot. I wouldn't say really nice, but a decent pivot. If you take another rally or another parallel off that, you saw a decent pivot again. Look where we're testing right now. Just below here is the monthly open. So for me, crude is coming in some near-term support, okay? And you could see this near-term upswing here. This is, by the way, just an hourly chart. You could see this near-term upswing here give us a little bit more of a pace to the upside before it reverses lower. I wouldn't be surprised. And the daily chart is pretty indicative of that as well. You saw rejection at 40. You saw rejection at 60 in momentum. As we noted yesterday, that's sort of a hallmark of a range-bound directional bias near term. You came into resistance. Here's the monthly open, near-term support, weekly low, structural support, and it could offer a little bit of a hold here on the decline that you're seeing in crude. So Conwall, as per your previous question, I can't say I'd necessarily advocate any fresh short exposure from here. I'm still in the mindset of selling rallies, but I wouldn't be looking to take any new fresh positioning from here. Now, with that understanding, Conwall, if we do break sub the monthly open and close below there, that's a game changer. Such a scenario would put us right back on track for that target that we talked about last week down at 42.91. Remember, we missed that by like cents. The low here was 43.02, literally like 10 cents off the low. So that's still the key 618 retracement and the parallel. All right. Feel free to take a quick snapshot of that if you need, Conwall. Let me know if you have any other questions on crude. So dollar CAD was number 4, crude was number 5. Hi, Michael. Could you define build into a position from Mark? Yeah, sure. I mean, it's exactly what I mean, Mark. So let me take a step back. So the levels I provide to you guys are the intraday scalp levels I'm looking at. By no means are these the only type of plays that I do, right? For example, let me just take a quick step back. Jamie is still holding a long position from 112 in euro dollar, right? So if one of you guys were looking at this chart last week, and certainly there's been no change to the euro levels, right? If we go back to the euro chart, from last week, you can note that we were looking, we were looking for a drop right into this region, right? So let's say the market came into this region last week and you jumped into the long position, right? As the market rallied, we're in an uptrend. Maybe you took some off here at 112.30 ahead of the weekly close, right? On these pullbacks, there's still an opportunity to add to that long position, right? It's not necessary that I close out the initial long before I can add to it. And in such a scenario, that's the best way to build into a broader trend. And when I talk about building into a position, that's exactly what I'm meaning, just adding to the position. That's the way I like to build into positions. A lot of people, you'll hear them say, oh, well, you know, I'm long, the market dumped into the next support target, I want to build that position up. In my humble opinion, guys, that's the worst way to build a position. You don't want to, you don't want to add to a loser, right? Because now if the market continues to move against you, your losses are exponential. And from our near-term directional bias, that's just not the way we want to play it. So if the market stops us out on a scalp bias, I'm out. But if the market continues to move in our favor, there's no problem with a pullback into support, add to that position, right? We pulled back into support, you get another long position. If you didn't take any off, add to that position. Or maybe you did clip some off. But in such a way where you're still adding to a winner instead of building on a losing trade. Does that make sense? This has got it. All right, cool. Okay, so that is euro dollar. Any questions on euro dollar, crude, dollar CAD? Good morning, sir. Do you happen to have a video or tutorial on RSI? Scott, there is tons of information that I have on YouTube if you go through the Daily FX archives for RSI. Also, if you go to the resource page on SB Trade Desk, and go to the scalp overview, okay? I do go into a little bit of a short sort of breakdown of how we use opening ranges, RSI. This was also a webinar that we did that went over in detailed different RSI timeframes for triggers that we use. So at your leisure, definitely take a look through that as far as the RSI triggers are concerned. One thing I want to stress to you, Scott, is I don't want you guys to get too heavily reliant on any oscillator. If it's one thing I've learned over the years and years and years of trading is that all these oscillators are backwards looking. They're not telling you what's going to happen. They told you what has happened. What we use them for is sort of a graphical representation of a shift in momentum. So I want to see some divergence. I want to see a trend line break and support just as they do in price. So for example, Scott, this would be basic support trigger and momentum. Okay, so if I was bearish, I'd be looking for divergence into a high and a break of this line, and that would be my trigger for the short. Same thing on the upside. If we're bullish, we want to see a resistance trigger, give us a little bit of a indication that a shift in momentum is happening. Okay, but I hope that's helpful there on a quick overview. It says, thank you, exclamation point. Cheers on that, Scott. My pleasure. Okay, Horace, I do see a yes. Did I miss your previous question? Scott, you're more than welcome. Sushil, we'll definitely look at Euro Oz. I do want to go over the Aussie dollar first. Here's what Aussie looks like heading into the U.S. Open. Sorry about that. All right, so Aussie dollar coming into some support. As we had noted earlier in the week, you know, we were looking for entry on the long side. And certainly the break that we saw of basic channel support last week shifted the bias lower late in the week. I was looking for a possible hold right around 75.80, 75.90. We kind of broke right through that. Next downside target is right here. We literally came off it to the pip in yesterday's trade. I think we talked about this briefly in the webinar. Here was what the update looked like from earlier on the Sunday approach. Okay, here's the open of the week. We were looking for a drop into 74.93 to possibly offer some long exposure. And again, you know, the broader invalidation level is down there, but I do think this is an area of which we could have offered some nice long exposure. That's exactly what you got. You missed that low by like 2 pips, The low here was 74.94, 1 pip, before a recovery break back above 30 in momentum. And then you got that rally right through, 74.50, kind of capped out at last week's open here before pulling back. Still like it higher, above 74.93, specifically now, guys. I also just want to note that it's the weekly opening range low. It's the 786 retracement. It's the monthly. Nope, I'm lying. It's the 31st low from last month. So you have some things to look at here again, which would suggest that I'd like to see this thing give us a little bit more of a support hold from this region. I can tell you that from the daily price action, doesn't look all that convincing. I would like to see a 40 hold in momentum. Broadly speaking, I'm still looking for possible long exposure here on Aussie while above 74.90. So you could see a little bit more weakness before this thing starts to turn. And with that in mind, Euro Aussie looks poised for further gains. Here's what it looks like right now. Okay, you're just coming back off of the highs of the session for Europe, but I do want to just highlight one thing. In the notes I have, all I said is watch the weekly OR. The weekly opening range low comes in just above the monthly open. Nice strong rebound off that. The weekly opening range high comes in just below that 50% extension, right at 49.96. Okay, and we're continuing to straddle the 2016 open. And that's right here, around 149.15, 149.14. Okay, here's your yearly open. So I do like it higher, and I like it higher while above this 48.90 level. It just so happens that we're just straddling that, and the weekly opening range low is right at the monthly open. So while above, what's the open again? The open is, well, above 48.37, I like long side exposure. Top side targets of importance are going to be that 50.22, and then the 200-day moving average, which coincides dead on with the 50 line, which caught the highs last month. And that's right around the 150.60, 150.67 mark here. In a possible wave 5 on Aussie, Scott, let me take a look back for you. Yes. Is that enough a direct answer for you? I think it could be actually a pretty clean 1, 2, 3, 4. Probe one more time, make a new low into 5. Could be a play. Absolutely. And actually, let me check something out real quick. Maybe even spike as low as 74.80. Just to complete 2 equal legs on a correction, then move higher. Yeah, could be an interpretation, Scott. At the end of the day, if this does break lower from here, I'm looking for 73.80 entry. Done. Just to put things as bluntly as I can, guys. 73.80 is the 618 retracement. It's the 200-day moving average. It's basic slope support that's been holding this thing for over a year now, and that all coincides right in this region. Near term, looking here for support, though, from a scalp bias, just for a little bit of a rebound. Questions on Aussie dollar. Keep in mind, for the Aussie, we do have employment data on tap tomorrow night, not tonight, and that'll be sort of a market mover that could offer a nice volatile trade here, at least heading into Thursday's trade session. All right. If there are no other questions on Aussie, Eileen says sterling dollar back to 131.50. All right, let's see. Yeah, I'd be looking for it. I'd be looking for that drop. And let me tack on a quick extension here. Oops. Yeah, give it room to 31.36 if we do get past this median line. But sure. And one other thing I just want to do is I just want to attempt to attach the slope here and see if it gives us any guidance. Okay. That gives you about 32. Yep. So you see this? You see how this works, guys? This is actually a really nice. This is actually a really nice opportunity to kind of go over real quick. I think this is for you, Scott, the RSI type of trades, man. This is an example of how only not do you want to just use RSIs as triggers for entries, but also for when you don't want to be in the trade. So for example, Scott, we were coming in saying, look, you know, Sterling's coming in some near-term support. I was looking for long triggers right here. Here's what the long trigger looked like. If we had broken that, and especially cross 50 to the upside at support, stop against the weekly low, would have been a really beautiful trade, right? But at the end of the day, rejection, and there's your trigger break. Not necessarily going to prompt a new short exposure, but certainly kept us off trying to fade the move. Does that make sense? Oh, he says, I'm on my cell, so having a hard time seeing it clearly, but it looks pretty clean. Cheers, Scott. Well, if you look at the replay of this, I have it up on the chart here. Just wanted to show it to you. So using RSIs not only as entries, guys, but these triggers also of expectations of when you don't want to fade the move, when you don't want to go against the trend. So again, we're still in oversold territory here, Eileen, and we'll want to see that change before we start to fade this move in the British pound. I expected, you know, come in line, U.S. markets are gonna still react to the UK data that we got in overnight. Might drag this thing a little bit lower, but don't necessarily expect a straight fall through just yet. All right, Michael, for gold, are you expecting lower today? So Conwall, yes, let's take a quick look at gold, and then we'll come back to Kiwi. We covered Euro Aussie. That was number 7. Gold will be number 8, and number 9 will be Kiwi. Here's what gold looks like. Okay, so for gold's part, as I noted yesterday in the webinar, for those of you who were with us on Daily FX, nothing's changed at all. I don't necessarily trade gold intraday, Conwall, so I don't want to give you a personal expectation of what's going to do today. But what I can tell you is this. As far as if you're looking for short exposure, you're at support, okay? You'd need to break below yesterday's low to really validate a breakdown. On that scenario, I do like this thing all the way down to 1302. Okay, you have the monthly open just ahead of that 1308, but 1302 now is going to be the 100-day moving average, basic slope support, the 100% extension of the decline off the highs for the year, and those all converge right here. Okay, near term, Conwall, to be quite frank with you, I do think this could rally still from here off this support. Maybe back as high as that longer term trendline resistance dating back to the 2011 all-time record high. But you could see a pop higher before it moves lower. At the end of the day, you're at support. The levels haven't changed, and they've been super clean here. Conwall, questions on gold? Again, I don't really track this near term, but if I were to look at this, you could see some near-term waning divergence. So again, price action making a series of lower lows, the oscillator making higher lows. That's telling you the downside's getting a little bit tired here. Nice rejection on an outside candle here for the hourly chart. So an outside reversal candle took you higher. On the approach, you rebounded right ahead of the low hourly close. So, you know what I'm saying? You're holding 40 in momentum. You could get a little bit of a rebound higher from here, but ultimately, I do think you still look lower in gold. You're more than welcome. It's my pleasure. Okay, we are good on time. So let me take a quick segue here, guys, and we'll talk about the Kiwi dollar. Coming into a critical area of support. I was just talking with Jamie about this as well earlier today. But from my part, guys, 72.95, 72.92 is make or break. Okay, if we push below this level today, I do think you look for a much more deeper cut to the downside here in Kiwi dollar. That being said, you're basically at support. Make or break. This is a huge inflection region. I know you guys are sick of hearing me talk about it, but I'm gonna I'm gonna remind you nonetheless once more. The March 2015 low day close, low day reversal close nonetheless. The high day close back here from July, which continued to offer a really nice pivot in price until the inevitable break this month. Basic trendline support also converges on this region. And now, on the near term, you have the weekly opening range low. So there's enough stacked up at 72.92 that if this thing does break, I think it puts the downside bias firmly in place for the Kiwi dollar. Also, keep in mind a couple of different things. This is a near-term slope. You might have seen Jamie tweet a chart of this earlier today. Just wanted to highlight upper median line parallel, which broke yesterday. Now support also on that critical region just below 73. Momentum failed at 60, now is below 40. Not a very bullish expectation. So Scott, on this one, he says another 5 wave. It could be, but I don't think this one is quite as clean. I mean, you could interpret this as 1, and then this will be 2, or 1, 2, 3, 4, and you look for the downside 5. But I don't think you have a clean wave count within the confines of wave 3. I don't think that this initial wave necessarily is going to satisfy, a lower high. So I'm not really, ecstatic about this wave count, Scott, specifically here on Kiwi. So look, it's at support. If it breaks 72.91, look for short triggers targeting the monthly open, targeting 72.18. More importantly, down into 71.55 would be sort of a bigger region of support. But as it stands right now, let's see if there's any possibilities for a counter trend position in Kiwi heading into the US Open. Okay. Series of higher lows, series of lower highs, that's divergence. Series of lower lows, series of higher lows, that's divergence on the 5-minute as well. Take the trigger off the high in price, remember, off the close high in price. We don't want to take triggers off of the high in momentum because the high in momentum means nothing. It's all about the high in price, guys. So you look for the close high, and that's the reference point you use for your resistance triggers. So I'll be on the lookout here, actually. This might be a nice trade into the US Open for just a near-term recovery trade. Remember, until we clear the weekly opening range, guys, any scalps that you take intraday should be within the confines of the position. So as soon as we get into the opening range high for the week, I'll definitely be taking something off, bring my stops to break even. I might leave something on, and more often than not, guys, I always leave something on the trade, even if it's 1/10 of my position size. Just because if the breakout happens or you do get the extended play through, I'll let it sit there, right? And you might grab another 20, 30 pips on the upside if it does swing higher. Long story short, you're at a critical juncture near term at 72.90 here for Kiwi. All right. Any questions on New Zealand dollar? Do you think this thing does make a nice rebound off this region? Again, near-term resistance 73.60. A break above 73.80 would be needed to shift the focus back towards the high day close. Okay, this is just a basic. Actually, I stand corrected. I added this before the webinar. We have a new low in play here. Woo! Adds further conviction to the opening range high for the week. You don't need this anymore. All right, so levels unchanged here for Kiwi dollar. Any questions on key? In fact, you have some divergence here on the 5-minute just off that latest low. Looks like a decent play. See if we can't time this right here. Jump into a quick position, especially if we go through 50. Yeah, this looks like a good one. Not only did it get that, if you take, again, the high in price, if the high in price here does not match with the high here or is lower, obviously you're not going to draw a trend line there. So the most recent high in price actually looks like a trigger just broke out on divergence. And these are your favorite triggers, guys. So I actually do like the long side from here against the low. Again, divergence into a trigger break. Always going to be your best bets on a near-term recovery play here for Kiwi. So if we see we can't get a little pullback here, we'll jump back into a long position. That is Kiwi dollar. And the final one on my list, I do want to just touch on dollar yen and pound yen. Obviously, I'm not trading dollar yen, but this thing just made a ridiculous rebound yesterday off of perfect median line parallel support. I'm going to keep this off screen here, guys, and I'll continue to monitor it. If I jump in, I'll let you know. But here's what dollar yen looks like. Man, I couldn't believe this when I came in this morning. Look at that. I mean, I can't make this stuff up, guys. This is the same chart that you might recognize from back here on the 7th of last week. That's this level right here. We probed through it last week. We rallied. I have no clue what happened right there. There is a slope line that does come into play, but obviously I wasn't playing the dollar yen from those levels. So either way, the break to the downside, look where we found support at that same key region. Again, exact tag of the 618 line here. This is not the 50 line. This is the 618 line of the ascending pitchfork formation we've been working with. So my point being, guys, all of this is to say that near-term resistance still coincides right here. 102.60, the opening range high comes in just higher at 102.62. You have the actual concerted median line off the low right there as well, and basic trendline resistance off the highs for the month also there. So watch 102.60. If we do break above this, specifically on a closed basis, I want to see this thing rip, and I do think you'll get it. So keep that in mind as far as dollar yen is concerned. So what that means, that yen weakness, if pound does materialize on a rebound off of support, pound yen would also be a decent play. Here's what pound yen looks like on the near term. So look for a move lower first, possibly a drop into 34.45. And I think this would be a beautiful possible entry for another move to the upside. If you look to the right of my screen on the cursor for the daily chart, that level would coincide dead on with former resistance, now support. Okay, so I could sort of envision a scenario where you see a quick drop, a washout down to 34.40, and then a nice long trigger or possibly a fade move off that region to get us back on track. We're obviously not going to really stress this formation, guys. We haven't had any tags or touches of it. It was a speculative one that we added last week, but for future reference on the way up, a break through that would sort of dismiss any concerns about a downside move. So looking for a dip lower in pound yen to possibly offer some nice long entries on that pair. Any questions on pound yen? Yeah, Eileen says euro yen. Well, euro yen seems mirroring dollar yen. Haven't really checked out euro yen. Let me take a look. Okay, so it looks to me like Euro Yen is in some sort of near-term consolidation. I don't like these trades where you have overbought to oversold, above 60, below 40. And if you look at momentum itself is contracting. Um, like I said, the swings which went above 70 are now holding and starting to fail at 60. The swings that went below 30 are now holding and starting to fail at 40, as price action is showing a lower high and a higher low. So I think you want to treat this as a range near term. The daily chart, really, in my mind, the only thing that pops out is the weekly opening range. Even the broader consolidation that you've seen off the lows from July still has us within the confines of this consolidation. So Eileen, look for this break until this breaks out. If you want to play the inside of that consolidation, I got no problem against that. I would still cite near-term resistance right here at the monthly open at 115.40, but I wouldn't really be looking to target anything outside of this consolidation until it breaks. Does that make sense, Eileen? As far as euro dollar or euro yen? Ultimately, I do like the upside, but near term, I think, you could get back into 115.40, fail there. By the way, 115.40 is not only the monthly open, Eileen, but it's also the 618 retracement of just this near-term decline. So I could see a scenario where it comes back into here, sort of consolidates lower, and maybe gives us a couple more days before you move into the apex of that position. Makes sense, she says. Okay, I see it now. Right on. Yeah, feel free to take a quick snapshot of that. Eileen says, I did. Great on. Conwall says, your prediction for crude is working nicely. It's not my prediction again, man. It's the levels of the market, and I'm just giving them to you, Conwall. I appreciate that, though. Yeah, coming off some near-term support here. Unfortunately, I didn't get to jump into that dollar Kiwi position. It was a great sort of indication. I just wanted to show you a walkthrough here. I still think you can get a pullback and get back long into the U.S. Open. If you did catch this long just now as we were talking about it, stop is against the low, and I'd be looking for a topside objective initially for Kiwi dollar on that rally. First at the weekly open, which comes in at 73.20, so about 7 pips higher from where we are now. And then I'd be looking for a possible rally towards 73.60, which is, again, that basic 236. One other thing you might want to just take into consideration is a basic retracement off the highs here. I know this is going to get messy, but bear with me. Let's see where a basic 38.2 comes into play. Yeah, 73.50 be another area. Ultimately, if we get into 73.80, I would be looking for a possible opportunity to get on the other side of that trade. Oh, I'm sorry. This did not snap. Okay, that's what I was looking for it to do. Right here, 73.60, 73.65. Still hiding the same region. Okay, that is dollar yen and CAD yen, and sterling yen rather, 10. We did euro yen, that was 11. And the reason you might see me counting these out is because, guys, if you haven't noticed, just to make it easier for the replays on the intraday scalp webinars, I try to just to, right under the video, give you the order that we covered the material in. This way, you can kind of fast forward if you're looking for a specific pair that you want a quick update on. It'll be easier to find. So let me know if that's been helpful for you guys. Sort of been making an effort to kind of make that easier. Adam says, very helpful. Cheers, man. Was it you who recommended it? I think someone from the room recommended it. So I hope you guys find that helpful. Okay, let me know if you have any other questions, guys. I've kind of exhausted all the setups I'm looking through. I don't want to draw your attention to anything beyond this at this point. Keep your eyes on the Kiwi position. Sterling and Euro I'm poised. I'm like trigger happy. We're just waiting for those to give me the pullback to see if we can get a position on that. Aussie dollar also, it's going to be an interesting week. There's really nothing on tap as far as data is concerned. Aussie dollar turn, question from Eileen. Okay, so you're seeing some indications here of an Aussie turn. Sure. Divergence, like it. Divergence, like it. I don't necessarily have a trigger to put me in the position at this point. There was one here that already gave out. I think you're better off on a rebound type of play here. I think I'm more interested in playing the Kiwi, just from a positioning standpoint. If this thing gets lower into, 74 90s, I would be more interested in possibly trying to play it just deeper into this cushion here. Whereas Kiwi dollar, Eileen, is already there. This thing is right in it. Do you know what I mean? So it's always better, guys, to kind of cherry pick and I guess cherry pick's the only word I can use. When we're looking at these positions, see which one's going to give you the best bang for the buck from a positioning standpoint. It's all about where the market is and what our key levels are. Yeah, we're looking at sort of the same kind of rebound play. I completely agree with you on that one. But of the two, I think from a level standpoint, Kiwi will be much better off. You'll know if you're wrong right off the bat, because if 72.92 gives out, again, I'm expecting some really quick downside, and you're closer to your key support level. So definitely something to keep in mind. Hi, Mike. Do you think pound can still go up, or do we turn bearish already? So I think, Wes, you might have came in late. I went over this earlier in the session, right? I'm still looking for support, broadly speaking, on the long side well above 31.55. You know what I mean? I'm not in a scalp right now. Let me bring up the near-term chart and see if there's anything that's coming up on the 5-minute. Yeah, so I'm not going to be someone who will buy a trade that's in oversold condition, because remember, it can stay down here for an indefinite time period. And it's the biggest mistake people make. Oh, it's oversold, so I need to buy it. No, this thing can stay sub 40 for the next 10 hours, right? And actually, in actuality, when we're in that oversold condition, that's when the market typically sees the strongest and most assertive side of the downtrend. So yeah, I think pound could go a little lower before we go higher. And on the near-term approach, sort of 31.55 is the next downside target. For me to get constructive again, I would need to get 32.34 under our belt and then look to buy a pullback to go higher. Now, that's just my humble opinion, Wes. It could rebound from right here. I don't know. But for me, there needs to be a technical factor to put me into the trade. Just because the market's coming into support in and of itself is not a reason to get long, guys. Support is made to be broken. Resistance is made to be breached. But once we get that turn in price on the near-term price action, momentum starting to get some divergence, now you're starting to get, more evidence to support your thesis. And that's all a trade is, a thesis. The more pieces of evidence we can get to support what we're thinking, the stronger the conviction. So yeah, I have trendline support. I have median line support. Don't have necessarily a momentum trigger yet. On the near term, don't necessarily have a momentum divergence yet. So for me, I'll have to sit this one out for now. Wes, I hope that gives you a little bit of a taste of kind of my thought process. Thanks. Do you think I should cut my long position at 132.30, I think you mean, and get short instead? So if you're long from 32.30, which is I think what you're saying, if you're long from that position, my stop basically would be below the low we just made here. Yeah, here's the thing, Wes, if it really depends what you're looking to do with the position, man. And and this concerns me when I get questions like this. I'm not picking on you by any means, but it concerns me because I need to know that you have a game plan. What was your stop at and what was your target at? If you were looking to target something north of 34, yeah, put your stop below 31.50, no problem. But if you were looking for a near-term scalp into 32.80, this should really be sort of where you start to cut out of that position if we move beyond that low. Okay, because it could drop as low as 31.50. If you're okay sitting into a drop into that position, that's, your perspective. But just some food for thought there. So Wes, hope that helps. He says, oh, thanks. Yeah, you're more than welcome, man. Thanks for another great session, Adam. I appreciate that. You're always on top of things. My pleasure, man. Always great to see you guys. Going to go ahead and wrap it up here. We'll be back on board tomorrow morning, same time, same channel. Again, also tomorrow afternoon, remember you have Jamie's midweek strategy webinar to give us a nice little update as we head into the close of the week and a precursor to next week's FOMC policy decision. Best of luck trading today, guys, and I'll see you tomorrow morning. Cheers.